Good evening, everyone. Thank you all for being here for our webinar. As you see here, and as we've discussed, we're going to be talking about ACG, high limit disability insurance benefit available to ACG members. I'm going to give it just another minute here or so to make sure everyone is able to join us who's registered. Thank you guys for being here. Let me know real quick if you can hear me okay. Make sure my phone's working. Just a couple messages. Up in the upper left, there's a Q&A button you'll see, where you can click Q&A and you can send me a message directly. And myself and Jacob Sigler here will be the only ones who'll see it. Good. Looks like everybody can hear me. Okay. So, it's time to start here, a little bit after 5, so let's get going. Again, as myself, I'm Ian Ellis. I'm with Wealth Management Strategies, and I'm here with Jacob Sigler as well, also with WMS. We are a contractual partner with the ACG. We are not the ACG directly. However, we're the partners who manage the ACG benefits program. So various benefits for insurance and investments and group benefits and those types of things that are available through the ACG, special advantages for ACG members, is all managed by us. So it's new this year. It's just been launched. I think you've probably seen some things in the emails, and possibly if you've been to some of the regional meetings, we've been there, talked a little bit about it. So we're excited. This is our first webinar talking about one of the benefits that we currently have available. So let's get into it a little bit. That's a little bit about who we are. I'm going to try and get my screen working right here. Hopefully everybody can see. Okay, good. All right, so very first, just a quick overview. I mentioned briefly who we are. I want to talk about this benefit program. This is something that's been in the works for almost 3 years now. This started back when Dr. Hanauer was actually president of the association, and so we started working with him and started working with executive leadership to design benefit program that would be useful for the members. We also worked with a task force for many months, which was select members across the country representing different practice sizes and locations and ages to try and help us design the benefits program. And then we went back and forth negotiating with various providers to try and come up with some benefits and some special offerings specifically for ACG members. And so that's the genesis of the program. That's where it's come from. It's been important to the executive leadership that this be something that provides real legitimate benefit and unique benefits to members, not just, you know, your basic Visa rewards, frequent flyer mile type of thing. So, although I love my frequent flyer miles. Anyhow, so let's go into it a little bit. I just want to briefly list the benefits that we do have currently live and available. As you know, high limit disability insurance, we're going to talk about that one today. We also have something called the Physician's Life Income Plan. This is something that is like an individual retirement savings vehicle that you can do in addition to any of the retirement plans you have. It has doesn't have any limits on your contributions. It doesn't have any age limits on when you take it out. You still get some tax deferral, so it's a pretty cool plan. We'll probably be talking about that in one of our upcoming webinars. We have a company retirement platform. This is for those of you with a practice or a hospital system or somewhere you've got employees and you're dealing with a 401k, 403b, 457. This also does cash balance plans, defined benefit plans. Any of those types of things are available and can be managed through this company retirement platform. It has some great benefits and some great pricing. It's offered by AXA Equitable, and we'll discuss that in a future webinar as well. We have a group benefits program. This is your typical, maybe if you offer long-term disability to all your employees, kind of an employer-paid program, or if you offer dental or vision, group life, any of those types of things, you're going to have multiple participants, guaranteed issue type of situation, some amazing pricing on these benefits. We have a group we just did recently, and they were with Unum, and I believe we came back with savings between the already aggressive pricing of the carrier combined with the discount they're giving to ACG members. I think we ended up saving over 60% off the Unum rates, which is in kind of crazy. It's a little bit high. I wouldn't say expect 60% every time we quote these, but significant savings. I'd be surprised anything less than 20-25% savings off of current plans you're using. So that's a great benefit that's available. Also, the last couple of benefits here, there's an online financial tool that you can use for kind of managing and monitoring all your different financial insurance accounts and trust documents, all those types of things. It makes your kind of managing your personal financial life a little bit easier. And then we offer personal business planning. So we at Wealth Management Strategies, we are a full-featured wealth management and financial services firm. So we do a lot of planning for our clients and our business owners. And that's something that we've extended to all the members of the ACG at discounted rates. So if you have any interest in any of those, these are all live benefits. They're available now. They're on, you can see them on the website. The ACG website has a link. If you go to our website, which is wmsirvine.com/ACG, I'll show you a link to that at the end of the webinar. You can see some more information about these tools. Contact us directly. Okay? So let's get into high-limit disability. That's what we're here to talk about today. Again, because of the format and the number of people attending, I'm the only one you can hear speaking. You can send us questions through the Q&A, and we'll try and answer them as we go. Okay? So, real quickly, today's agenda, we're talking about high-limit disability insurance plan. I'm going to start with what is disability insurance. I'm sure that's basic for most of you. You already have it, probably. Certainly probably know what it is. So I'll touch very briefly on what it is and why we need it. Just some statistics to kind of open our eyes a little bit. And then I'll talk about the difference between a traditional disability insurance plan, which you probably already have one of, and the high-limit disability insurance plan that we're talking about here through the ACG. And it's actually a plan that comes through Lloyd's of London. We'll also touch on how to determine your eligible coverage amount. That's something that's not always entirely clear for people. This is a ratio of your income and things like that. So we'll talk about that. We'll talk about specific programs, details for the ACG program and the ACG members only stuff. And then we'll talk about next steps. What do you want to do if you want to move forward, get a quote, and apply and stuff like that. Okay? So first, touching briefly, disability income insurance. What is it? We all know what it is, right? It's an insurance policy that pays a benefit if the insured person is disabled and is no longer able to perform the duties of their occupation. And those last couple words there, their occupation is important. You know, there are policies out there that would say you're disabled if you're unable to perform the duties of any occupation. Especially for physicians, it's important that we make sure you have an own occupation definition. That way, you can be eligible for your benefit. Even if you could go back to work doing something else, you're still eligible to receive your benefit if you can't do what you were doing before you got hurt or got sick. You know, so if you end up with a situation where you can't, you've got a back injury and you can't stand for multiple hours at a time, that prevents you from doing procedures all day long. That prevents you from doing the work you used to do. When you go into teaching or consulting, you would still be eligible to receive your disability benefit because you can't do what you did before. We wouldn't want an any occupation definition, because then you get into a situation where as soon as you go back to work doing anything, you stop receiving your benefit. So that's an important component to your insurance plan. This plan and any plan you get as a physician should make sure it has that own occupation definition. So as we see here, it's intended to replace lost income. We do a calculation based on how many income you have or you're making. Typically, in a disability insurance plan, this plan included, would attempt to replace approximately 60% of your before-tax gross income. And the reason 60% is because the benefits you receive are almost always tax-free in these situations. And so if you're taking your gross income pre-tax and applying a tax rate to that, state and federal tax rates, you're going to be close to that 60% net. And so by replacing it with tax-free income, if we replace roughly 60% of your gross income, that's going to be the equivalent of getting 100% of your gross income. So that's why they use that number, and we'll talk more about that later. A quick note here on the difference between temporary and permanent disability. The immediate difference there is obvious. Temporary disability is something in which you'll be able to return to work at some point in time, and a permanent disability is one which you are not expected to be able to return to work. As far as this program is concerned, temporary disability is considered basically within 5 years. After 5 years, you can receive a permanent disability benefit. And we'll talk about the differences of those two in a minute. Okay? So that's quick and easy. We know what disability income insurance is. Let's touch on why we need it. This is just a brief slide. You can't pick your disability. This is just to remind us that there's a lot more to becoming disabled than a car accident or cancer. You know, there's a lot of different medical illnesses, and I'm sure that you are all aware of and have witnessed those and the burdens they can place on individuals and their families that can impact our ability to work, and different types of injuries that can impact our ability to work. So this isn't always just a catastrophic situation. This can be, you know, injuries to ligaments in the hands that can prevent you from being able to do procedures, and or like I mentioned earlier, your back and your ability to stand for long periods of time, or even your eyes, your ability to focus and concentrate. So all of those types of things can be considered a disability. And this is some statistics on what kind of what a lot of the disabilities are made up of. And then here's a kind of I think it's a bit of a shocking slide. And so what are the chances you're going to become disabled during your working years? And you can see here, take a 45-year-old, there's a 40% chance you're going to become disabled before you're 65. 40% chance. I mean, that's 2 in 5. That's a lot of people. It's almost half of those on this call today would, statistically speaking, will become disabled before we're done working. So, and as you can see here, the younger you are, the greater the chance of becoming disabled. This is primarily because you have more years between now and the time in which you'll be disabled. Also, a little bit of a factor in there into some of the risks and the types of activities that younger people do, but for the most part, this has to do with the number of years left to age 65 and the odds of being able to becoming retired. And as you see, obviously, as we get older, average length of our disability is extended. That typically is because it takes us longer to recover from injuries and things like that. So that's a quick slide. It's just a shocking slide. You know, people don't, I think, realize how likely disability can be. So we'll have to remind everybody about that. Apologize, got a little screen pop up there. Okay, so next, let's talk about the difference between traditional disability insurance and high-limit disability insurance, or sometimes what's called surplus disability insurance. So we're going to start with the kind of a definition of a problem. Traditional disability insurance, which is something you probably already have. This is something that, if you become disabled, pays out a monthly benefit, usually up until some age, 65 or 70 or sometimes even 75. Usually it's 65. That's from U.S.-based insurance companies like the Standard, like Principal, like MetLife. Those life insurance companies also typically offer disability insurance. The problem is those companies, the traditional market as a whole, has extremely low benefit caps relative to the incomes earned by physicians and practice owners and people running centers, endoscopy centers. Whatever it is you're doing, odds are your income will significantly exceed the caps that we're seeing in traditional insurance, disability insurance markets. That cap is usually $15,000 a month, maybe $17,000 a month at the top end. So if we're running, just run a little calculator here, if you're looking at $15,000 a month as their maximum cap from a traditional market, times 12 months, and remember this is 60% of your gross, so we're going to divide that by 0.6, that's a $300,000 a year income. So if you're making more than roughly $300,000 or so a year, you're not going to be able to replace all of your income with a traditional disability insurance plan. And so that's why high-limit disability exists. And that's what this this note here mentions, that you're going to have this gap, right? So if we can't replace all of our income with traditional disability insurance, and those caps are consistent across the market, what is our solution? What is the option for us? And that's where this high-limit disability comes in. This is a specialty program through specialty carriers. The one we're using for the ACG is Lloyd's of London. You've probably heard of them, one of the largest insurance markets in the world, obviously based out of London. So what they're offering is a high-limit disability plan that can get you up to $1 million or more a month of disability coverage. Obviously, that's an excessive number. Most people don't need that much. That covers like $20 million a year of gross income, but plenty of capacity to support almost everybody. Now, the way this one works, this is intended to supplement your traditional coverage. This is not a replacement. This is intended to go on top of what your traditional coverage is. So if you've got 15,000 of traditional coverage, this guy might add 5 or 10 or 20,000 more of benefit in order to get you up to where you need to be. It's not intended to be the first dollar coverage. It is also based on individual contracts. They provide individual contracts and group contract options. Excuse me, I'm stumbling over my words there. Slow down and take a drink of water. So they're offering individual and they're offering group contracts. We have a question real quick here. Does income include, okay, so there's a question, does income include W-2 and distributions from ancillary income? Yes, and under this program, they'll recognize other sources of income, not just your W-2 income. So if you own an endoscopy center and you have a K-1 income coming from that, even if you have real estate income, you've got K-1s coming from that, all of those things can be considered when determining your gross income for this program, okay? And bonus income or any other type of compensation structure you have. Okay, so that's the solution. That's what this is providing. Here's just a quick graphic. You see in the blue here, I've got your sample annual income, and you've got the traditional disability only providing 15,000, and the high limit disability steps up to provide the other, in this case, 85,000 of coverage. That's obviously an extreme example, but that's what this is doing. Okay. So I guess it's maybe not that extreme example for many of you on the call. Certainly, you guys have incomes that high and above. So let's talk about how we determine your monthly benefit and how you determine what you're eligible for under the high limit program, because it's very simple, but it's a little bit of math. So it's important for everybody to understand. Now, you don't have to memorize this and do it yourself. You call us or email us and we can help you determine this coverage. And you don't have to take all of the coverage you're eligible for, but this is how you can kind of determine that, okay? So like I said earlier, we take 60% of your gross income, and then when we're determining the amount for this high limit, we're going to reduce it by your traditional disability coverage in force. If you don't have traditional disability coverage in force, you will need to place it, or at least attempt to place it. If for some reason you can't place it, for example, we have clients that are race car drivers, and they can't get traditional insurance. So then we can go to the Lloyd's program, and they'll be the first dollar, and they'll be the only coverage. But it costs more, obviously, to do that. So we place the traditional coverage. If you don't have it, we can certainly help you do that. There are some discounts available through some different carriers. If you're a member of the AMA, that's actually the best place we've found to get the traditional coverage. The discounts are pretty deep, and the coverage is pretty good. So you have to have that traditional coverage in place, and then we can add this high limit coverage on top of that. So we reduce whatever coverage you have in the traditional. So let me show you an example real quick. This is an example, $500,000 income. We take 60% of that, it's $300,000, and I use these numbers because they're easy to work with. That's a monthly benefit of $25,000. $25,000 a month gets you to that $300,000. Okay, that's the maximum potential benefit. Now we take out whatever traditional coverage you have. So in this case, let's say it's $15,000 of traditional coverage. That's a common maximum. That would leave us with $10,000 per month benefit that we could get coverage on from the high limit surplus line. Okay. Now, if you've got $1 million in coverage, then obviously that number goes, or $1 million of gross income, that number goes way up, right? But this is an example would show you kind of how we calculate. That's your monthly benefit. Now, let me briefly describe something that I would actually be describing in the next slide, but it'll make more sense if I do it now. There are, as I mentioned earlier, two different definitions of disability under this program. There's the temporary disability and the permanent disability. And typically these two are placed together. We'll take the temporary total disability, which will pay you out for 60 months or 5 years. Okay, you've got a 90-day wait period, then it'll pay you out for 60 months. And that's, for example, this $10,000 benefit we did in the previous example here. You get $10,000 a month every month for 60 months. At the end of that 60-month period, if you're still disabled, you're considered permanently totally disabled, and you'll receive a permanent disability benefit under this program. That comes as a lump sum check. So your monthly benefit payments will stop. You'll get a single check at the end of that period if you're still disabled, and then your benefits will stop. So we usually calculate that coverage kind of based on how many years you would have left that you should be getting that monthly until you turn 65. But the nice thing is you get it all at once. So if you want to use it to go buy a new business or you're going to invest in something else, you'll have that big lump sum check. You won't just have the monthly payments coming in. So that's how that works. Let me show you an example. Now this number, determining your lump sum benefit, your lump sum benefit is a little bit more negotiable. Sometimes you don't have to calculate it this way. This is just kind of the standard way to calculate it. If you wanted more or less, we can do that. So the way we do here, we're taking your working years remaining to age 65 times the monthly benefit less, the months you already received the benefits. Let me show you an example. Let's say you're currently 45 years old. That leaves you 20 years between age 45 and age 65. You'll be getting those 5 years worth of benefit payments. So that leaves us 15 years that we still need to provide for a benefit. That's what this lump sum needs to cover. It's 180 months times, and if I'm following the same example from above, that $10,000 monthly benefit times 180 months, it's a $1.8 million lump sum check. Now you don't have to take out 1.8. You can say I only want $1 million lump sum. If you have some reasons you think you would like some more, then we can possibly arrange for that as well. But this is the standard calculation. So if you came to me and said, I have $500,000 of income, I have $15,000 traditional coverage, I'm 45 years old, can you calculate my benefits? This would be the standard calculation I would do. Now all of this can be tweaked and customized for each individual, but this would kind of be the standard way. $10,000 a month benefit for 5 years. At the end of those 5 years, if you're still disabled, $1.8 million lump sum. Okay? Question here, let's see. If you return to work at the same career within the 5 years, does the 5-year payment stop? Yes. So as soon as you return to work, doing your same occupation as you were before, that monthly benefit would stop paying out. And if you've done that before the 5-year mark, now your lump sum wouldn't pay out at all. So the monthlies will stop as soon as you go back to work, and your lump sum won't pay out because you aren't considered permanently disabled because you're back to work. Now, on the flip side of that, what if you went back to work in the 6th year? You will have received all 5 years of the monthly benefits. If you're still considered disabled at the end of that period, you would receive your lump sum benefit, in this example, the $1.8 million, and then you would still be able to go back to work and you keep all the benefits you received. So at the end of the 5 years, that's one of the nice things. Another nice thing with the lump sum, if you do end up returning to work at some point in the future beyond that 5-year period, you get to keep that lump sum. Okay? Okay, so, and through that last slide, we probably went through a lot of already the details of the program. You're starting to understand how it works, but let me just hit this slide, the details for the ACG specifically. Okay, this plan is available in different formats in the regular market but there's some specific benefits to ACG members. So, as we mentioned, it's a Lloyd's of London program. The coverage, like we talked about, is pretty significant and virtually unlimited. However, there are some different categories. There's 2 ways you can apply for this. Okay, you can apply under what's called the simplified issue, which is a 1-page application with essentially 3 health questions. And I say 1 page, and people say, yeah, you say 1 page, but then I get 10 in the mail. It's really 1 page. I'll show you the page in just a minute. It's a 1-page application, 3 questions, very easy. That has its own limits, okay? That has that 5-year benefit. The temporary total disability is limited at $10,000 a month. So that goes on top of whatever your traditional is. And then your permanent total disability up to a $5 million lump sum. We can scale that back, obviously, and often do, but that's the maximum available on the lump sum permanent total disability. That's what PTD stands for. That's simplified issue. That's the 1-page, 3 questions, can get you up to $10,000 a month and up to $5 million lump sum. Now, full underwriting, which is more like what you've probably already done. You're going to fill out a little bit longer application, some more health questions. They're probably going to go out and grab some medical records from your doctors. You may or may not have to do an exam, or we'll send an examiner out and they'll ask some questions, take blood and urine samples. depending on how high of a limit you're going for. But that's full underwriting. So anything above the 10,000 and the 5 million would be full underwriting. We can get almost anything you need. Again, this slide here shows up to 225 million available under lump sum underwriting. For this is each individual. This is not the whole group. This is one person. Okay. And even if you're going full underwriting, you still get the ACG discount, which, by the way, we haven't mentioned yet. But the ACG discount is 20% off the standard street rates for this program. So right off the bat, you save 20% because you're a member of ACG and you're paying your, what, $350 a year, or I don't know what your membership dues are, but you're going to save a lot more than that by just with this policy, okay? And that's to everybody, and that includes group plans. So we'll talk about that in a second here. And again, like I mentioned earlier, own occupation definition, that's very important to make sure that whatever you're doing, you have that. Okay, that simplified issue I talked about, here's the one page. It's this one-page application. It's got some of your basic information, your name, your address, Social Security number, your annual income. And then there's the 3 health questions I mentioned. Here's one. Have you used tobacco in the last 12 months, yes or no? If yes, you're going to have to give some details of what type and how often you use it. And the other one, which is kind of a single question with 2 parts, it asks, are you now or have you been at work full-time in your usual and customary manner, performing all your duties of your occupation over the last 6 months, it's asking. And then also in the last 6 months, have you been homebound or hospitalized for an accident or injury or illness? That's it. Those are your 3 questions. So in the last 6 months, accident, injury, illness, have you been working full-time in your normal duties? In the last 12 months, have you used tobacco? That's it. Okay, so you answer those questions, and the rest of it, that's your simplified issue application. This is the one that gets you up to $10,000 a month and up to $5 million lump sum. We got a question here. If you start out with the simplified plan, can you upgrade to the full underwriting plan if your income increases in the future? Yes. So to answer that question, you can upgrade or increase or limit at any time. You have to submit additional information. So if your income increases and you go into the full underwriting plan, you have to submit some backup to justify, to show the income, do some financial underwriting, as well as you may have to renew some of the medical information if you're increasing coverage. But you can do that at any time. You're not locked into staying in the simplified program if you start there. What else? I'm trying to think if there's anything else important on that. Oh, on the simplified program, the simplified issue application, you're going to tell them how much you make, but you're not going to have to show them anything. No tax returns, no pay stubs, no K-1s. You're just telling them how much you make. Now, they're just going to believe you. The only burden or the only thing you have to be aware of, and the reason you wouldn't want to be dishonest in that, is that someday down the road, if you were to become disabled and you put claim on for the benefit, you'll have to go back and show that you actually did make that income. So you have to justify your income at the time of claim rather than at the time of application. Okay. Okay. Is the plan non-cancelable? Yes. So this is I'll make sure I answer this right. I'll answer 2 parts to this. So you can cancel the plan anytime. So it is cancelable by the insured, although you're paying an annual premium, so you'll be able to cancel it on the annual anniversary of the plan. And then the plan is non-cancelable by the insurance company, by Lloyd's, for a guaranteed period of 5 years. So from the time of application, time you take out the policy, for 5 years, your premium is guaranteed and it's non-cancelable. At the end of that 5-year period, you resubmit your information and you'll get a new premium. So this premium does adjust every 5 years. So hopefully that answers the question. The company can't cancel you during the 5 years, and then if they reissue a new one, then they can't cancel for another 5 years. You, the insurer, can cancel at any time. Okay? I hope that answers that question. That was the simplified issue application. Somebody wanted me to go back up the screen here. The screen, so I could take a screenshot. I'm going to read another question here. Okay. Okay, so you might be answering this later, but please indicate if we are eligible for this program if our minds are intact but we're unable to do procedures. Does the disability kick in? Yes. So anything that prevents you from doing the regular duties of your current occupation makes you eligible for the benefit. So any physical ailments, like I mentioned earlier, damage to your hands or your back, or anything that prevents you from doing what you do now makes you eligible for the benefit. Okay? I'm going to go back here where we were. Simplified issue. Okay, some examples, some applications in practice. This is to kind of identify different areas of practice people might be in and how it would apply here. So if you're in a single specialty practice, either an individual or a group, as long as the whole group are the same specialty, or obviously if you're an individual, so if everybody's a gastroenterologist in your group, individuals can obtain policies independent of the group, just because you're part of the ACG and you get the ACG discount, or the entire group may be able to obtain policies as long as one of the group members is an ACG member. So if you're all gastroenterologists and there's eight gastroenterologists in the office, as long as one of you is an ACG member, we can get the ACG discounting for the group, assuming this is all same specialty. Now, if you have more than 5 physicians in the group and everyone's going to participate, we could also possibly get guaranteed issue and even sometimes additional discounting. If we're getting a whole group and the group's big enough, the pricing we'll get the 20% ACG discount and sometimes even better. So that's something to keep in mind. So that's the single specialty practice. Multi-specialty group, individual gastroenterologists that are members of the ACG can get policies of their own. The group can be eligible for group discounting, but they're not going to get the ACG discounts unless we have enough ACG members in the group. This is in the multi-specialty group. So if you have a multi-specialty office with 30 physicians and 2 of you are ACG GIs, then you're probably not going to get the ACG discounting for the whole group. We could still get guaranteed issue. We could still get group discounting, but you won't get the ACG discounting. Or if you took an individual policy out, you'll get the ACG discounting, but obviously wouldn't be getting the guaranteed issue. So that comes on a case-by-case basis. Come to us, talk to us, let us know what you're looking at. We can look at it both ways with you. You can compare the numbers and decide what you want to do. Okay, the next thing here, employed by hospital, health system, or academic center. Obviously, individuals, if you're an ACG member, you can be eligible for the discounting and the policy. As far as the whole group goes, the entire hospital, health system, or academic center, there are not going to be any members inside that group that are not ACG members wouldn't be eligible for the discounts. Now, those are obviously large systems, so if you've got a system like that, you think there's interest, we can put something together. It would kind of be its own standalone group program, but those are so big that we could get some significant group discounting and guaranteed issue stuff that would make up for the lack of the ACG discount possibly. And then solo practitioners, obviously you're eligible for this benefit as if you're an ACG member. Okay. And then another question, someone came up earlier. Let's see here. Okay, if the group, if all physicians in the group are GIs, but we have other employees we'd like to cover, or PAs and NPs. So yeah, if you've got PAs or NPs that are making enough, or office administrators that are making enough that you want to provide this coverage to them as well, you could do that. And if all the physicians are GIs or in the ACG, then yeah, that discounting would apply to everybody. To answer that question, I don't know that there's a lot of PAs and NPs making that much, but if that were the situation, or other types of members of your practice, then that's certainly a possibility. Okay? So let's move on. Oh, so here's a couple quick examples. Here's a single life example. Over here on the left, let me pull so I can find my pointer. Try and make it easier to follow. Okay, so my little red pointer here. You got a $10,000 monthly benefit. So here's the different clients. There's 3 different clients, 35, 45, 55. Let's look at the 45-year-old. A $10,000 monthly benefit, that's that 5-year benefit that pays out every month for 5 years, but we looked at the example earlier. Standard rate for that policy would be $3,629. With the ACG discounting, you're looking at $2,722. Then, if you added a $5 million lump sum on top of that, keep in mind that's a significant lump sum. It's much more than the 1.8 we calculated earlier. You'd be looking at about a $15,000 annual premium for that $5 million lump sum. So the total benefit, if you were doing both, is $27.22 plus $15,188. The combined benefit $17,000 a month. Now, so that's for total benefit of $10,000 a month for 60 months. So there's $600,000 plus $5 million. So you're looking at $5.6 million benefit for $17,000 a year. So that pricing is still really good. If you don't need $5 million of benefit or don't want $5 million of benefit, we dial that down, and obviously that number changes a lot, right? So if this is a $2.5 million benefit, this is more like $7 grand, $7,500 bucks. This is a 1 point something, and so this starts getting down to $3,000, $4,000, $5,000 depending on the benefit you're looking for. A question here. Let's see here if I can read this right. Okay, we had a couple questions. This one's from earlier. I'm sorry I missed this earlier. So, is a lump sum taxed as ordinary income in the year which is received? No, because remember, these benefits are almost always tax-free benefits. There's a couple rare situations in which it could be taxable, but we would know that ahead of time when you're applying and how you've got it structured, and we give you a warning about that's what's happening. We recommend you structure it a different way. But no, these are going to be individually owned. They're going to be tax-free, including the lump sum. So you don't have to worry about getting a massive tax hit in that lump sum year. Okay, let's see. Is there an option to just purchase the permanent temporary disability and not the total temporary disability? I'm sorry, permanent total disability and not the temporary total disability to go for lower premium? Yes. So let me clarify that. I apologize for reading out loud, and I don't think I did a very good job of reading. Your temporary disability, the monthly premium, the monthly benefit that pays for 5 years, and the lump sum benefit which pays after 5 years, those can be purchased individually. However, there's some caveats to that. So the monthly benefit can certainly be purchased individually without the lump sum benefit at the end. If you wanted to purchase just the lump sum and not the temporary, that can be done, but typically we're going to recommend, and the carrier will probably push for a shorter elimination period, because essentially what you're doing at that point in time, you're asking for a lump sum benefit with a 5-year elimination period, and they typically would do that. So what they would do is, if you don't want the monthly benefit, they might encourage maybe a 1-year elimination period or something like that. So that's all kind of negotiable. We have to quote it based on what it is you're trying to accomplish, but all of that can be done. Okay. Question: what are TTD and PTD on the chart? That was on the last chart. Where was that? Here. TTD and PTD. Temporary total disability, that's the monthly premium or monthly benefit. P is permanent total disability. That's if you've been disabled for the entire 5-year period, and then beyond, you're considered permanent. That's when you get the lump sum. Okay? So that was the individual case example. Let's move on to the multi-life example. So here's one where, and these are real numbers. We ran this for a group of a couple months ago. There's 7 physicians in the group. I don't know why their age is not showing up in that column here, but you can see their ages range from, see, this is maybe 37, 38 on the young end, to late 50s. So there's a range of ages here. And in this case, what they asked for was they wanted to just assume everyone makes $500,000. Now, sometimes you got a group, not everyone wants to share their income. That's fine. We can give you numbers based on assumed incomes. But if you move forward with the plan, at some point in time, we'll have to show and justify income, unless it's a guaranteed issue like this, and then it wouldn't matter until it was time for claim. Okay, but this is assumed an annual income of $500,000 for everybody. So assuming that, and eliminating the traditional coverage they already had in place as a group, they had a group plan in place with, I think, $15,000 of coverage for the physicians. Again, a guaranteed issue, which is nice. If you've got a group like this, you can guarantee issue the traditional side and guarantee issue the high limit side, so nobody's ever got to do any medical underwriting. And obviously that becomes beneficial because, one, you don't have to deal with the hassle, and two, if you do have a member of the group who's got some health concerns, they'll be able to get coverage as well. So this took out that traditional coverage. That left them with about $93.50 of the monthly benefit for each person. And then a lump sum benefit, as you can see, ranges from everywhere from 112 all the way up to $1 million. And then in this group, they wanted to cap it at $1 million. But this range is based on ages, okay? And so there's a total potential benefit of each individual here, $600,000 for this person, $1.5 million for this person. That assumes they pay out the full 5 years, $93.50 for 60 months. That's $561,000 plus the $1 million lump sum. There's your 1.56. That's a total potential benefit. And here's your premium for each person. And you can see here, these younger physicians, 1.5 of benefit, they're paying $2,700 a year, $2,800 a year. This is guaranteed issue, no underwriting whatsoever. Okay, and for the even for the older physicians, you're looking at $5,000 to $6,000 a year for this benefit. So your total premium for this whole group is going to be $30-something thousand. Okay, that's a group example. Individual pricing group, and this does include the ACG discounting. Someone asked that question here. Does that include ACG discounting? Yes, it does. Both of these show the ACG discount. This one showed the standard rate and then the discounted rate. This slide just showed the final rate, which did include discounting. Okay? Okay, so let's talk next steps real quick. Now that you know how the program works, we can talk about how to get quotes and how to submit an application. So getting a rate quote, here's the information we're going to need from you. I need your name, your date of birth, the state you live in and work in, assuming they're the same. If they're not, tell us each. We need your gross income. This is your total gross income. This can include W-2, bonus, performance, production. It can include K-1s from your center. It can include K-1s from your real estate. Just give me a total number, and then give the current traditional coverage amount you get. Really what we're looking for is the monthly benefit. So if you've got a MetLife policy paying you $12,500 a month, tell us that. Okay? And you can email that directly to us. You can call us and give it to us. Here's the email address. It's acgbenefits@wmsirvine.com. That stands for Wealth Management Strategies. And Irvine's the city where we're headquartered in California. We do have an office in New York, San Diego, and Los Angeles as well. But we're headquartered here in Irvine. So Wealth Management Strategies, wmsirvine.com. Email us this information, then we can get you a quote, turn it around usually next day, depending on what time of day we get it and how busy we are, but typically we'll get that next day. My pop-up's back. Okay, so also, so you know, if you're hesitant or you're concerned about being contacted a lot, this isn't a situation where you're going to send us an email, all of a sudden now we've got your information, you're going to get marketed to us like crazy. We work for the ACG. Our job is to manage and support the benefits program for the college. So our job is to service you and to provide you whatever you need, respond to you. We'll probably follow up once or twice to make sure, because we know you're busy and we don't want things to get dropped that you didn't want to drop. But we're not going to hassle you. Okay, we're not a marketing and sales organization that's going to come after you. We're here to support the ACG. There's 14,000 members. We're busy helping everybody. So we're not going to be hassling anyone. So don't be afraid to shoot us an email with a quick question or shoot us an email for a quote. If you get that information, we'll follow up once or twice, and then we'll leave you alone, okay? But to that end as well, you know, if you want to do something, you need to get on it or need to respond to us, because we're not going to hassle you. We'll send it once or twice, and then we're going to leave you alone. Okay, so if you want to submit a full application, same thing, email us, say, hey, I want to apply for the benefit. We'll send you the application if it's a one-pager or the full underwriting, depending on what you're going for. You can call us directly. Here's the direct ACG line. This is for the ACG members only. It's 949-335-0199. And you can also do it online. Again, wmsirvine.com/ACG. And then there you can have some of the different benefits that are offered. You can click into each benefit page. For the you can't apply online for everything, but for the group, for high limit disability, if it's an individual case, you can apply online. If it's a group case, then we have to work with you on that. You can't do that online. Okay? Question and answer. So I'm going to go back and leave it on this screen in case you want to write that down. And let's get some question and answer going here. See, that was 45 minutes, so we'll try and get you guys out of here quickly. Cancel, we answered that. Apologize as I try and scan through some of this. Jacob and I are trying to make sure we don't miss anything. Okay, here's a question, and we haven't answered this one yet. If we have more than one current or one plan currently, one of which is low quality and we'd like to drop, would we have to cancel that plan before we apply for this in order to get full benefits from this plan? No, you don't have to drop that. If you're intending to replace that or drop that, you just need to let us know that so that we can quote the appropriate amount, assuming that policy is going to be gone if this new policy is issued. Because we wouldn't want you to drop that until this is issued, or we get the price and we go through and we're ready to issue this policy. At that point in time, you'd obviously want to drop that other one. But you just need to let us know that so we can calculate the numbers correctly. But you don't have to drop it until after you get this one issued. Okay? Okay. Question regarding the approximate premiums based on ages. It seemed the premium was much higher for the 53-year-old, even though you stated there's a greater chance of disability at a younger age. Okay, so this is back to the earlier slide. So yeah, you'll notice the premiums are higher for older members than they are for younger members, which seems intuitive, but earlier I mentioned the possibility of being disabled is greater when you're young. And like I mentioned before, that's just because of the number of years you still have of your working life in which you might become disabled. That's why the probability is so much higher. So still, if you take the given risk of any individual, an older member is going to have greater propensity to illness or to injury, and so their premiums are going to be higher. Also, their length of disability is typically longer. Another reason their premiums would be a little higher. Okay, hope that answers that question. We answered that one. Do you only receive the lump sum if you purchase the temporary total disability and the permanent total disability plan? No, the lump sum is its own plan, can be its own plan, but like I mentioned earlier, we would probably adjust the waiting period if you're not going to get the 5-year monthly payout plan. So they would pay out independent, depending on which ones you have, or both. Are the examples you quoted showing the discounts? Yes. So the individual and group prices both showed included the ACG discount. Okay. To clarify, if you purchase the temporary disability at the end of 5 years, that is it. No lump sum, just 5 years minus the 90 days. So no, so if you purchase the temporary total, yes, if you purchase the temporary total disability only, then you get the 5 years, 60 months of monthly benefits. At the end of that period, that is it. There would not be a lump sum unless you also purchased for the permanent disability lump sum amount. So that's correct. To clarify, if you only pay for the premium for the temporary disability, you're only going to get those 5 years, potentially up to 5 years worth of benefits. You would need to be paying the premium for both to get the lump sum as well. If you apply for a full underwriting plan, do you also have to reapply every 5 years? Yes, although the application requirements is not as extensive as the initial application. But you do have to submit some additional information every 5 years. Are you locked in at current income at the time of application? No. Okay, that's a good question. So you're not locked into your income at the time of the application. Really what they're actually going to do is they're going to average your income. So if you make $1 million a year for 4 years and then all of a sudden for some reason you make $500,000 the last year, you would be able to average those all together to determine your income. So it wouldn't just be the income you happen to be making the last year. What they won't do is they're not going to underwrite for projected future income. So if you just started a new practice and your base is 500 and you're expecting production of another 300, we can't calculate that in if you haven't had the production historically. Now, if you're starting brand new at a practice and so you don't have income, let's say you were a fellow or you were a resident, and you don't have the last 3 or 4 years of significant income, but you're brand new, and that's okay. You can use your current income as it, and they'll underwrite to this that 1 year income or your contract income. You don't have to. They don't have to average backwards if you don't have the history. Okay. Okay. The questions. That looks like all the questions. I will hang tight for another minute here. Make sure we don't have any more questions. We're going for 51 minutes, so I imagine everybody's ready to get out of here. Kids' soccer practices to go to. I have traffic waiting for me on the freeway. But I will, we're going to hang tight for just one more minute. If you got nothing else and you think we've covered everything, there will be a follow-up email with links to the recorded session. You can email us direct. Our email address will be in there. You can email us for quote requests. You can email us now for quote requests if you want. Try and take care of all that for you. Doesn't look like we have any more questions coming in, and people are starting to drop off, so that tells me we're done. So we will hang here. We're not going anywhere, but if you have any questions, let us know. Otherwise, I'm going to go on mute so that you can't hear me, and we'll end the webinar once it seems like everybody's kind of gone. Okay? Thanks so much, and have a great evening.